Alright. Good afternoon, everyone. Today is going to be yet another full daily review. Today is Thursday, May 9th. So we're going to be reviewing this daily candle right here. Let's get straight into it. Okay. So, as you can see here, we're obviously in a buy program. Okay. Came up off this discount relative to the yearly range. If we take our old daily dealing range, we see that we had a nice optimal trade entry into the 62% retracement level. Okay, came up off that nicely, changed the day delivery above this very large daily bullish order block here. Okay, and we left this fair value gap open, not even, giving anything time of day here. We're just really extended to the upside. And if you take a look here, not only did we trade above here as a market structure break above the swing high here, but we also disregarded the midpoint of this wick, and we also closed above new week opening gap. So in short, we're closing above several premium arrays, and this is telling me we're in a very strong buy program. And what do we look at the upside as the draw? All these highs in here. Okay, so my main focus until the market shows me otherwise is going to be up here. So what do we expect? Clearly there can be retracements, but going forward, what I'm expecting is us to open, trade below the opening, trade higher, open, trade below the opening, trade higher. Okay, very simple. That's our buy program, and we expect that until we reached the buy side liquidity. Okay. Now, coming into today, what happened? We came up, traded down into this first daily fair value gap, so a small retracement into the inefficiency. And then what happened? On Thursday, we open and we work in. Let's measure it out. If you measure this wick, you see that we trade exactly to half of that daily wick, and you see the beautiful precision off of that. So actually I want to add in, prior to the New York session long that we took, we already had us work in this daily wick here, midpoint, and come up off of it like this. So that was one key indicator for the bullish price action we saw manifest here today. With that being said, let's flip over to NASDAQ. It's a little bit of a difference here. Okay, so it definitely was not as strong, and I'd be expecting us to come clear out this swing high here tomorrow, but I mean basically same thing, except the only difference is we actually were able to reach fair value for larger funds down here at the new week opening gap. See that? Or trace down within. And go back to ES, just looking at it as, we're bullish until we reach the buy side. We see that we come down and we create this swing high here. The average speculator is viewing this as, okay, we're overbought and it needs a nice large retracement. We know that, and we know as soon as it creates that first swing high right here, we're going to look to offset that with the proper signatures that presented in price today. And there's going to be a lot of buy stops already being placed above the swing high here, and we see it trade straight through it. Okay, so with all that, let's go ahead and, well, actually before I drop down, I want to show you dollar index. We were able to frame a short off of dollar index. If we take our fib here, here's our swing high. Remember what I said in the streams, particularly yesterday. Whenever you're able to frame a setup inversely on dollar index, the probabilities for your trade go through the motherfucking roof. Okay, so here's our dealing range on dollar index. We trade up above into a premium, touch exactly that optimal trade entry level, 62%. Trade up into this bearish order block. Okay, and what do we have below? We have this daily fair value gap and this volume imbalance here. Okay, and I would actually like to see us continue lower here on dollar index down into working in this wick here. Okay, it's a little bit inefficient. I would really like to see us work down in here. Okay, back into the breaker here once more. All right, so with that being said, let's go ahead and drop down to the hourly time frame on ES. Okay, where's our midnight opening? Right away, right here. Let's go ahead and extend that forward. Okay, so going into the day, we see that we drop down after that midnight opening. Okay, this is our classic bullish power of three. So we open, trade below the opening, trade higher. What was the purpose of us trading lower here? Define discount. Okay, here's our dealing range. Swing low to high. What do? We trade down into the 62% retracement level, and one of the key signatures here is look what takes place. We come down, and where is that body? Right at that 60% optimal trade entry level. That is pinpoint precision, and that's a key indicator for us to begin looking at these highs here. Okay, So we have an optimal trade entry. We have a discount priced in below midnight opening price. What do we do below midnight opening price? We accumulate short positions to distribute them higher. What's the draw? Okay, disregard the daily time frame because we don't even need that. Just look here. Look at these highs right here. What do you think is absolutely dog piled above here? These 3 clean highs. This is like that triple top type thing. Large pool of buy side liquidity resting here. And then here's that daily swing high that I mentioned where automatically lots of buy stops go above there, thinking that they're catching some type of top. Okay, so when we're in buy programs, it happens every single time. They make a high, make it look convincing like they did here, trade off, and then boom, they offset that, and lots of people are getting liquidated. Okay, now another thing that I'm about to add in here for extra confluence, which is very powerful, is a weekly profile standpoint. Where are we at? This here, we have a bullish Monday, bullish Tuesday, Wednesday decline. So this is our classic Wednesday retracement leading into a Thursday and Friday continuation higher. So this is a very classic weekly profile. And this is Monday, Tuesday trade higher, Wednesday retraces into some type of sell side liquidity pool or inefficiency. In this case, we had sell stops triggered here and that daily for value gap that I showed you on the daily time frame. Okay, so here's our retracement. And then we're expecting bullish price action Thursday, and we'd like to see a continuation Friday. All right. Now, another thing I'm about to show you that's powerful. See how we had a failure swing here? Okay. NASDAQ also failed to get below that low. Let's go to dollar index. Dollar index actually ran above that high, so framing the short inversely. We also look at SMT inversely. Oh, wait a minute. We can frame SMTs with dollar index and the average. Yes, you absolutely can. So as we were failing to make that low, we see that inversely dollar index made a higher high, clearing buy side, tapping up into that daily bearish order block. And from there, we have another little run on short-term stops. We trade below this hourly up close candle here, change the state delivery. And then what was this green shade area that I was marking out in the live stream? This is our daily for value gap. And I mentioned and annotated well in advance, this was what I was targeting. So this is basically just midpoint of that daily for value gap on dollar index. And what aligned with midpoint? Look to the left of your chart. We have this significant discount hourly imbalance with sell side liquidity resting below these relative equal lows here. So we have several lower time frame targets within that daily for value gap. Okay, so this is everything that I was framing with the short as I was expecting the averages to rise up. So that added to the probabilities, right? Now, with all this being said, let's go ahead and drop to that 15-minute time frame. All right, so once again, we have that discount priced in. We have our determined bullish bias. We have lots of buy stops resting here and here. And we see that we traded down to a discount. Discount what? Well, take a look here. Here's our fair value gap. Repriced that beautifully. And as I was able to frame to you the weekly profile, which played out beautifully, we also have a daily very strong daily profile in the works here today. This here was our classic London low of the day being formed below that midnight opening. On bullish days, write it down, there's a 70% chance of the low of the day being formed between 2 to 5 a.m. in London. Now, we covered outside the lines a little bit with this low. It's at 5:15, but that's okay. But here's our classic London low. New York Judah swing, New York continuation. Okay, this is a very classic daily profile. London low of the day, New York continuation, and then as the classic buy day, PM session continuation as well. All right, so let me go ahead and map out. This here is our daily buy side liquidity. Just so you can see it on the lower time frames, that's all. Okay, there we go. And as we can see here, okay, let me go back to the hourly time frame so you guys know what these black lines are. So clearly I have these in bold. This here is our balanced price range. This was a beautiful utilization of this balanced price range in the New York session. Now, write this down. Balanced price ranges are only useful if time aligns. Okay, so it covers outside the lines here, whatnot, because we're not in the optimal time of day yet. Once we enter that New York kill zone, we then begin to look at it with a bullish bias in mind. Okay, so determine your bias. wait till it's the optimal time of day, and then consider balanced price range just like I'm using here. Okay, so we pass up through it here, offering buy side of the curve. We offer sell side of the curve, buy side of the curve again, and then we leave it. Balanced price range. Okay, so let's go to that 15-minute time frame. This here is going to be our short-term dealing range. So we take this low to the high, and going into that 9:30 opening, what do we get? Our very classic 9:30 judo swing. Here's our opening. What happens? Wicks up a little bit, yes, but it trades down into what? 62% retracement level. Here's our classic New York session optimal trade entry. And more specifically, what type of discount do we price in? This discount for value gap. And we also bump down into that balanced price range. What happens now that time is aligning? We close at the high end of it and create a swing low. That is a dead giveaway of our New York session continuation. Hence why I was able to take a very high probability long right here. Okay, so along with this fair value gap, here's our down close candles. This is our classic bullish order block. Okay, and as I'm mapping everything out here, before I head to the lower time frames, go to the NASDAQ, and you're going to see it's a little bit more sloppy here, but it was definitely useful. Okay, so if we look here from the London low, notice the London low stayed intact, which was very key because this is an intermittent term low. Okay, we trade no discount, swing low here, higher swing low to the left, higher swing low to the right. There's our classic intermittent term low. We leave that, and then we leave the London low intact, which is key. So anyway, going ahead of the 9:30 opening range, here is our dealing range. 9:30 opening does what? Opens, slams down, doing what? Look what happens here. This is a very powerful thing to pick up on, I promise you. 79% retracement level. We trade down and through it, but where do we close? Above it. That right there is a very key indicator, as you already have a bullish bias determined. Now, what else is taking place specifically with this retracement? See these two lows here? This is our internal range sell side liquidity. Okay, so basically, I'm saying internal range sell side liquidity, and I mean it's literally just how it sounds. It's literally, here's our range, low to high. This is two sell side liquidity lows within the range. Okay, so internal sell side liquidity. Okay, don't like overthink it or whatnot. Now, notice, let's flip back to ES. Were these lows taken out? No, they were not. So what is this? This is the SMT divergence. ES showing relative strength. This is the one you want to be longing because it's showing relative strength. And guess what? That's the one I longed in the live stream. Okay. Now, NASDAQ. I'm going to go ahead and flip down to that 5-minute time frame. Okay. And as we can see here, after all the dirty work here was done, here's our classic judo swing. So we open, trade below the opening. So accumulation, manipulation, distribution of longs. Okay, this consolidation here, accumulation, manipulation, 9:30 judo swing to lull traders into getting short and knock out, those who have already been longing, and then distributing higher to the buy side liquidity. Now, after we reprice in the 79% retracement level and have that closure and sell side's been taken, what else are we trading into? Take a look at this down close candle here. Take the midpoint of that, extend that forward. The bodies are relatively stacking up with half of this 5-minute bullish order block right here. Beautiful. Now, what happens after that? We get our initial expansion higher. That's kind of like our hint, because now that we had the manipulation take place, and then, we're in that macro, we get that initial expansion. That's our first hint of bullish price action, and we can pick up on that and get long. Let's take our fib. Here's our classic New York session optimal trade entry. We trade down to a 62% retracement level. From there, let's drop down to the 1-minute time frame. Before I do that, let's map out this. Okay, why is this a high probable bullish order block? Well, number one, if you see here, this down close candle, it opens and propels us below that sell side liquidity. And then following us piercing that sell side liquidity, we have an immediate response off of that, trading below the opening. That's a change of the state of delivery. And we create not one, but two fair value gaps following that. All these components here is what makes this a key order block. Alright, so let's go down to the 1 minute time frame. Okay, so here's our optimal trade entry, swings down into the order block. We have one little short-term run-on stops here. And then we have another expansion leg here, trading above this swing high right here. This here is our classic market structure shift. Now this is only significant because sell stops have already been taken, the discount has already been priced in, and the manipulation in the marketplace has already been taken in consideration, right? So what do I always tell you guys? Wait for manipulation, and then you take your entry. You always let the manipulation take place. You never want to trade right whenever the market's more likely to manipulate, which is at, you know, high impact news releases, 9:30 openings, the opening range. You always just, like, it always pays off to wait. I promise you. Okay. Anyways, after we have this market structure shift here, we retrace back down into this fair value gap here. This is a long you could have taken. I longed ES as we were trading down here in NASDAQ, okay, because ES clearly was the cleaner average today. So boom, right here, here's the long. Overshoots it a little bit, but that's okay. We allow for that with our stop loss. And then boom, off to the races. Remember what I said. This here is a clear market maker buy model. This here is an original consolidation. Okay, 932 to swing down into the discount arrays, already explained. Smart money reversal. Return above the original consolidation form of buy side liquidity. Now, with all this being said, I'm going to flip over to ES just because it was a lot cleaner in my opinion, particularly in those lower time frames. So, here's our 15-minute levels. Here's our order block on the 15-minute time frame, the imbalance right there. Trade down to the balanced price range. What do? We close above the low. See these two relative equal lows here? This is internal sell side liquidity, so ES is also taking internal sell side liquidity even though we failed to get down here for our SMT divergence. Okay, so we have that short-term discount priced in. Nothing in here, real time, as you guys saw me do live. There was no entry for me yet, okay? We didn't really get anything significant until we reached here. So we got that expansion above, okay, trading into new highs. Trades back down, blows out a short-term low. What does this do? This is a continuation of a buy program. So whenever in buy programs, you're always going to see stuff like this take place on the lower time frames. You'll see like a 1 minute low formed, and then you'll see it trade below that, and then buy program continues. This was all that was needed to continue that buy program and kick the algos back into buying. Where did we buy here? Well, short-term low taken, trade down to a short-term discount here, trade above, and just like on NASDAQ, we have a market structure shift above this swing high right here. And then what happens? We retrace that back down in, and if you saw me do it live, this here is a breaker. Okay. Now, you typically don't see breakers being used this way, do you? Right? So we had a high, low, higher, trades below, back into the breaker here. And then it fails here. We close above it, and then we're using the breaker inversely. Any PD array, wicks, fair value gaps, breakers, order blocks, anything, I don't care what it is. Any one of them can be used inversely, and that's what we see here. Now, obviously you didn't need to use the breaker inversely, but it was a nice key reference point. So we're going to the breaker, and we have this 1 minute fair value gap. Why is this a good long? Because we still have yet to reach that buy side liquidity mapped out. Remember, that daily buy side liquidity swing high. So we're anticipating the buy program to continue until we reach that buy side. What happens when we reach the buy side? You know, okay, we trade up a little bit more, consolidate, and then we trade back down, blowing out this short-term low here. Okay. Now, I think that just about covers it. Now, you're probably wondering, why didn't you mention time? Well, let's get into it. What time did this long take place? What time? Right here. When did this take place? 10:29 a.m. Is that an optimal trading time of the day that we typically work within? Yes. There's no better time window to trade than 10 to 11 a.m. Let's map it out here. This here, 8:30 to 11. This here is our New York kill zone. okay? So we look to take all of our trades within this New York kill zone here. And within the New York kill zones, we utilize the macros, okay? So even more specific within the New York kill zone. So why am I saying all this? Because the time of day is what kind of glues everything together and brings, like, it really just, really, time just adds so much to my edge. I can't even, like, I could talk all day about time, all right? It literally works wonders if you have a great understanding of it, okay? So I hope you guys enjoyed this review. It was a little bit more extended than usual, but lots of gems dropped. Maybe want to rewatch it and whatnot. But I hope to be seeing you guys tomorrow morning. And yeah.